Hi, I am Anna. I come from www.ntvforex.com. The EU deal ought to be positive for the euro. Can we look for further gains? http ntvforex.com News ID B7B0FC 7/21/2028 02:56 am. After 4 days of uneasy talks, EU leaders agreed to a 750 BN rescue package for the bloc, which includes 390 BN in grants. Although short of the 500 BN in grants first proposed, it nevertheless marks a significant moment for the EU. The frugals were bought off by increasing their rebates. They can thank Margaret Thatcher for that. The agreement is a classic EU fudge that papers over the schisms but is nonetheless a step forward towards ever closer union, and this time it's fiscal. This has been hailed as Europe's Hamiltonian moment as it involves mutual debt issuance. It's not quite that. We are not talking about mutualization of countries' existing debts. Nevertheless, it sets an important precedent in securing the idea of fiscal coordination, if not union. Italian yields fell to their lowest level in months, with the benchmark 10-year BTP under 1.12%. The deal ought to be a positive for the euro, and we can look for further gains. Eurist was well supported above 1.140 and moving higher to test near-term resistance at 1.1470 before we can look for the 1.15 target, the March high. A break here would mark an 18-month peak for the cross and could be chased higher with momentum favoring the euro. The next level would be the January 2019 highs around 1.1570. However, with the deal perhaps not ticking every box in terms of the amount of fiscal aid on offer, the euro may not be released from its range just yet. Sterling is also on the front foot, with BUST rising to 1.27 and achieving its best level in over a month. With the pressure off in terms of the pandemic rescue package and 7-year budget agreed, there may be hope that the EU is in a better position to agree to a Brexit deal. The pressure on the dollar left the dollar index testing support around 95.50. European equities were higher on a cocktail of the EU budget deal and the ongoing daily dose of vaccine news. AstraZeneca and Oxford University's candidate is showing promise, whilst there are positive signals from several other quarters. The DAX in Frankfurt surged 1.5% to make a fresh post-COVID high at 13,250. London and Paris remain within their June jewel ranges. The Nasdaq jumped 2.5% as the likes of Amazon, Alphabet, Apple, Microsoft, and Facebook all rose. Amazon shares leapt 8% and continued higher in after-hours trade to break $3,200 after two brokers upgraded their price target to $3,800. Despite positive vaccine news, this was not a reopening trade as such. In addition to Amazon, other COVID-proof stocks were very strong, with Peloton up over 10% and Zoom almost 9%. The S&P 500 rose 0.8% as tech lifted the boats. Retail may be going through its worst recession in memory, but not everyone is losing out. UK grocery sales rose 10% in the 4 weeks to July 11, with Tesco sales 12%, Sainsbury's 10.2% and Morrisons 15.7%. UK borrowing is surging 128 BN in the second quarter, but rates on gilts are negative out to 7 years, so there is very little worry about repaying it. The political pressure and inclination to raise taxes will increase, however. Gold rallied through $1,824 to make a fresh 9-year high as US real rates continued to edge lower, with 10-year tips down to 0.84%, their weakest in 7 years. The entire curve keeps going deeper into negative territory, with 5-year tips at 1.08% and 3-year tips have slipping to 0.30%. Crude oil has made a push back above $41, looking for a breach of the June highs at $41.60 to trigger further gains. Reversal could signal bulls' exhaustion. Subscribe our channel to receive the news as soon as possible. Thank you for watching.